The 14th of March, or Pi Day, was supposed to be a great day for the Pi network. Unfortunately, the Pi token went down in price. It was a sell the news event. The question now is, what's going to happen from here? Will there still be demand, or are we going to see further price dumps? We're going to look at the data most people aren't considering. Let's dive in. So first of all, this is what happened. The price of Pi went from $1.71 down to $1.43, a decline of 16% in less than 24 hours. Now, the first time we talked about Pi on this channel was over here, just prior to the rally, on the 12th of March. The video title was Huge Pi Network News Incoming. I tried to cover those kind of topics early when there's still some upside potential. Feel free to subscribe over here. But yeah, the situation has changed now. There was an announcement on the blog, Pi Day 2025. So this is the 6-year anniversary of Pi. And the major push from here is the integration of Pi as a payment mechanism for merchants. So there are also now Pi domains that will support the merchant integration. But it's important to know that those merchants also have to verify themselves, a problem that a lot of users actually had. Now here's the thing. The Pi team was able to attract a lot of new users through a referral program. So you can simply mine Pi by downloading an app. So you have that app on your phone and every day you just click a button to mine the Pi. Now the idea, the fundamental sales pitch was that you mine the Pi on your phone because that's much more decentralized than, for example, Bitcoin, right? Bitcoin has all of those data mines. It's got all of those huge data centers. In the early days, it was just the small guys, right? The geeks that mined Bitcoin on their laptop. Now that's not feasible anymore because it takes that much more computing power. So it's the big mining companies that now dominate Bitcoin mining. And that's a problem. The whole idea of cryptocurrency and of Bitcoin is that it's decentralized. So there's not a single point of failure. So the government cannot simply attack Bitcoin. That's the idea. But now with all of that centralized mining in Bitcoin, that's a potential failure point. And that's where Pi Network tried to jump in. The problem is that the mining of Pi does not happen with the CPUs or the GPUs of the mobile phones. Mining Pi is simply just clicking a button on a phone confirming that you're still active. There's no computation made. It's all just proof of stake. And the project itself, unfortunately, is quite centralized. So what was a nice sales pitch at the beginning now turned into a KYC driven click on a button, get some advertising revenue kind of project. Now, a lot of people got entirely disappointed. And that's because of this here. It's the listing of the token. There was actually a vote on the Binance community to include Pi as a listing on the platform. Binance has not listed Pi, and a lot of people expected this to happen on the 14th of March. It did not happen. It's still OKX, MEXC, and Gate.io that dominate the trading volume. And so before the news, we rallied, then people started to take profit, then came Pi Day without the Binance listing announcement. And that's where the price started to decline. Now here's the thing, if the Pi network team is able to somehow still convert all of that attention, all of the people that downloaded the app and clicked the button, if they are able to somehow get some of those people to buy the token, there might still be some upside potential, at least short term, because clearly people want to know about the project. So far, I published 2 videos on the project, and the first one outperformed the average video on this channel by 3.5x. The second one outperformed by 85%. In other words, there are still people that search for Pi. And those people might not necessarily be just the ones that downloaded the app and want to get free cryptocurrency. Some of them might be interested in buying the project. And why are so many people potentially interested in buying Pi? It's because it's one of the largest cryptocurrencies now. It's got a market cap of 10.6 billion. It's the 11th largest cryptocurrency. It's even larger than Chainlink. Now, don't confuse this. Don't believe that there is $10 billion that went into the project. The circulating supply is only roughly 7% of the maximum supply. So the market cap is highly inflated. Now, a lot of people got disappointed on Pi Day 2 days ago. It was not just because of the missing Binance launch. It was also because it was the deadline to move your Pi tokens from the app to to the main net. Now, why didn't a lot of people do this? Why couldn't they do this? It's because there was a KYC process, a many-step KYC process. And on step number 9, a lot of people simply got stuck. They never got approved to actually migrate the tokens. And so we are starting to get negative sentiment under the videos as well, right? Pioneers weren't rewarded for mining. The Pi network team is incompetent dogs who got 20 billion Pi tokens, selling them for fiat, but want us to use Pi coins. Well, have a look at this. Why so many issues? I can't believe Pi worth $11 billion. Millions of people can't get their tokens because the team wants to be the first to cash out. I'm losing hope, still tentative approval, and migrate to mainnet is still in queue. And so that then begs the question, right? All of those Pi tokens that got mined via this phone, right? Via daily clicking on the app. What happens with those tokens? Unfortunately, there is no answer. There's no clear confirmation on the fate of these tokens. They might get burned, they might get redistributed to the community, or they might just get allocated to the people developing Pi. And so what's probably going to happen depends on how greedy the team is or how much liquidity there actually is, how much demand for Pi we actually have. If there aren't enough people that buy Pi, then the team also doesn't need more tokens to potentially sell. And then a positive announcement of burning some of the tokens or redistributing them to the community might support the price. There's currently 1.7 billion unlocked mining rewards and 5.2 billion that are locked. So this is similar to staked coins. The circulating supply is 7 billion, right? So 7% of the 100 billion. Now, I personally do not like that there is more locked tokens than unlocked tokens, that there's so much staked supply. Because what does staking do? Staking artificially lowers the circulating supply and helps raising the price. Now, why do people stake? People stake in order to then get more tokens in the future. So we're simply just reducing the current supply to then afterwards artificially raise it in the future. We're reducing the supply now, we raise it in the future. Thus, when the supply hits the market in the future, when things get unstaked, then the price goes down. So what we want to see is an increasing supply that gets staked, but we don't want to see a high staked supply that might then afterwards potentially go down. And that's unfortunately what we currently see, right? We've got all of that locked mining rewards. Here is what happens when supply is increasing. Have a look at Arbitrum, for example. The Arbitrum supply grew from 1.3 billion to 4 billion. And this is the Arbitrum price relative to Ethereum. It simply just continued to go down, despite the ecosystem getting a lot of adoption. Yes, in US dollars, we sometimes had a rally. This is a 150% rally. But versus Ethereum, the rally was much more muted. It was only 50%. Again, because we are always looking at outperformance. Why in the end are we buying an altcoin, right? We buy an altcoin in order to get more return. Altcoins in general are more risky than just buying Bitcoin or Ethereum. When our altcoin doesn't do better than Bitcoin or Ethereum, we took on more risk and potentially even got worse return. We don't want that. Unfortunately, the vast majority of altcoins underperforms Bitcoin and Ethereum. And again, normally the reason is an increasing token supply, or it's the insiders that sell the tokens. Now, since we don't know what happened with all of those unclaimed tokens because of the failed KYC process, since this could all go to ecosystem development, or in other words, the team selling off the tokens, we have potentially another wave of supply coming in. Of course, if we now see an altcoin rally and all of the altcoins go up and the altcoins outperform Bitcoin and Ethereum, Pi might also benefit from this. And there is a reasonable case to be made that the altcoins are already somewhat cheap. So this is the altcoin market cap as a fraction of all of crypto. So now we exclude Bitcoin and Ethereum from this. The altcoins now are roughly 30% of all of crypto. But then on the other hand, we see how Bitcoin dominance continues to go up. So how Bitcoin becomes more and more important within crypto already since 2023. And that's mainly because of Wall Street buying. It's because of MicroStrategy buying. It's because of the families buying. They prefer just Bitcoin. They don't want to get into the nitty-gritty details of buying a random altcoin. And so the short term is probably now determined just by what the market makers are doing. The market makers hold a lot of Pi. And it's not going to be retail that really determines where the price is going. We've now got perpetual futures on Pi. And there are hundreds of millions of dollars worth of Pi that get traded on those perps. And that's leverage in the market. That moves the price up and down. And with that increased volatility, of course, comes potentially also a bit more attention. So I expect the price not to stay as stable. We might see sometimes a dump, then a pump again, then a subsequent dump. Pi is likely going to stay a roller coaster ride. And I'm not sure how well it will outperform over the long term. Again, because of the very uncertain supply situation. Clearly, the overall situation in crypto has changed recently. And there seems to be one event that started it all off. What we've got over here is the Bitcoin price. And this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PaxG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices. But that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management, how to set up those positions, also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly, and of course feel free to also check out premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.